The headline reads, December housing demand nears 3-year highs, spreads improve. What is the cause of this? Well, I will tell you, it is the spread between the 10-year Treasury and the 30-year fixed rate mortgage coming down, getting narrower. It is an increase in inventory, and it is also interest rates staying in a range right near 6%. So just above from the high sixes this summer down to where we're at, right in the 6.3 range for 30-year fixed rate conventional mortgages. And this week it is going to be crazy with all the news coming out. So what is happening? Let's get right into that. The economic calendar, we have a 3-year Treasury note auction on Monday, and then Tuesday we get the ADP preliminary estimate on jobs. We've had negative job reports from ADP in 4 of the last 6 months. We also have the job opening labor turnover survey, which should show that there are fewer jobs available. We have a 10-year Treasury auction on Tuesday, and then Wednesday's a big day. All right, not because the Bank of Canada is going to make their rate decision, but because the Fed is going to make its interest rate decision. The consensus is that we are going to get a 25 basis point cut. So there's really no surprise there, and we've kind of known that since that ADP jobs report came out last week. But what's going to really move the needle with rates is what Fed Chair Powell says afterwards. He will most likely be hawkish in the sense that he's going to say we're not going to lower the Fed funds rate anymore until we see concrete evidence that the job market is slowing and that inflation is slowing as well. And let's also remember, Friday's PCE report showed that the core inflation came down from 2.9 down to 2.8%. So you hear a lot of the mainstream media talking about how it's so much more expensive now, but the numbers are showing otherwise. And we know, and gas and energy prices really control so much of our economy. They are down under $3 a gallon across much of the United States. So big news coming out on Wednesday, and we'll also get their projections on how many times the Fed intends to cut the Fed funds rate in 2026. Thursday, we end the week really. There's no news on Friday. Thursday, you got initial and continuing jobless claims. We'll see what happens there. And of course, we always have this other, political, economic news, but really big news this week. Wednesday sets the table. Fed cutting rates, and then what the Fed Chair Powell says afterwards. So let's take a look. You got conventional rates between 6.25 and 6.4%. Again, getting closer to that 6% range. And VA, we are at 5.9. You take a look at the chart. You can see when we look at it from the year over year, really kind of up and down, but steady below 6% since basically the middle of November, below 6%. That is actually driving more applications. That's one of the biggest reasons why we have more applications right now than we have had in the last 3 years. What can we expect to see this week? You know what? Probably not going to go too much lower. Maybe we go down to 5.75 again. I think it really depends on what Fed Chair Powell says after the Fed makes the decision on rates and whether or not they're going to cut rates in December. So that's about all I got for you this week. Have a great week, and can't wait for you to see this week's housing market update. This week's housing market update, we're going to go over the December housing market report, or actually the November report from the Honolulu Board of Realtors, which just came out. Can't wait to show you that. It shows a slowing market in Oahu. And again, it's all about location, location, location. Which areas of Oahu are on fire? There's several of them. All right, have a great week. Aloha.